Joining us now from Sydney is Clifford Bennett. He's chief economist at Empire Economics and the author of the White Crane Report. Clifford Bennett, thanks very much indeed for joining us. Well, what do you make of what's been happening? Yeah, what do you make of what's been happening of late?
Well, I think it's, the most salient point, I guess, out of the last 48 hours or so, and I was suggesting that yesterday that everyone developed the most aggressively, most highly leveraged bullish strategy they could adopt on markets because we were clearly overshooting. But, we've just seen markets in the US have a tremendous rally when the Fed basically did nothing. It only took a few words of reminding that interest rates are on hold for an extended period, basically, slightly different language, for markets to have an enormous rally. That tells us that the equity market is caught badly short. It tells us that just in the GFC, when equity markets priced in a global depression that we never had, equity markets have just currently priced in a global recession that simply won't happen. And we've got a great divergence between the underlying reality, which is a far more robust global economy than markets are giving it credit for. That's the underlying reality. The consensus pricing in, if you like, is that of a recession. Markets really have to rally an awful long way to catch up with reality. So I'm very bullish indeed.
Clifford, one of the things which also came out of the Fed statement was the monetary tools that they had at their disposal. And there's a lot more talk now, especially when we saw the declines taking place. There's a lot more talk about a second, or should I say a third round of quantitative easing here, QE3. Now, you told us at the end of June that it would be a mistake. I'm assuming you maintain that.
Yes.
Why would it actually be a mistake?
Well, I think QE2 was more coincidental with an economic recovery in the US rather than a cause for that economic recovery period we did have in the US. I think a QE3 would be a mistake. We've already got enough issues as it is about sovereign debt, and although it's a different form of sovereign debt, really that still is what a QE3 would be. It's unnecessary. I think we've had a lot of negative sentiment about a slowing in growth in the US recovery, and certainly there has been a slowing in growth, but growth there still is in the US economy, unlike in Australia. If I could just refer briefly to previous comments there from our Federal Treasury, he seems a Federal Treasurer in denial. I noted that he said that our economy is rock solid. That would be because the only thing good about our economy at the moment is the rocks in the ground. But I made a small aside. I think QE3 would be bad for the US in that it's unnecessary. Again, it's interference with the free flow of markets. I think markets left to their own devices now have to rally because they're so far below reality. It's unfortunate that at the moment we in the markets, many of us seem to look toward Big Brother to save the day. We've just seen a tremendous sell down in private company valuations where their balance sheets are incredibly strong, where their earnings are going through the roof, where their profits are accelerating, and yet we're selling these companies because the public sector is in debt.
Clifford, I want to just quickly move things on and just to talk about your last report, which said that two things. This is a great buying opportunity, one part of it, and the other is we've just seen the last phase of fear.
Well, I think we have seen the last phase of fear. The price action yesterday, we saw sharp rallies based on rumour, and then we saw further strengthening of the market in the US based on we're willing to do things if necessary out of the Fed. Usually it would take, in these situations, if there was a real crisis in place, a real underlying fundamental crisis in play, it would take a lot more than mere jawboning from the Federal Reserve to give markets that big a rally. So I think the price action itself is telling us that the market is terribly short. And when all those short position holders try to take profits, we're going to see a lot more upside in this market.
Clifford, thanks so much for your time. Clifford Bennett there joining us. He's from Empire Economics and also author of the White Crane Report as well. Right.